All right, we're going to go through, we're starting into our first module here, which is focused on not-for-profit accounting. Okay, so this is either like private not-for-profit accounting or non-governmental not-for-profit accounting. And yeah, it's kind of a separate section. After we go through this information, the rest of the semester will be spent on governmental accounting. So you're probably more interested in not-for-profit accounting, a lot of you. However, it's not as like governmental accounting has more differences, and therefore it's tested more heavily on the CPA exam. Not-for-profit accounting, there are some differences, and we'll go over those things, but you'll see it's pretty straightforward. Normal students get it, pick up on it pretty quick. So just look at this. Format isn't the best on here, but that's all right. So this is from the codification. So the FASB codification, and it basically just is saying, you know, what distinguishes a non-business entity from a business entity or a for-profit entity. Okay, and so not all of these have to apply, but one of these three needs to apply, and you'll see that oftentimes all of this applies. So contributions from significant amounts of resources. So basically people are contributing, and this is the wording they use, which I think there's value in that, but I wouldn't necessarily memorize their exact words. Instead, understand the idea behind it. So bottom line, people are contributing to the entity, and they're not expecting something in return of equal value, right? So a for-profit entity, if you buy this computer, you give them money and you expect something of equal value in return, the computer. Whereas non-business entities don't have that, or there's a potential that they don't have that. Okay. Operating purposes other than to provide goods or services at a profit. Pretty self-explanatory, and kind of, I mean, kind of means the same thing as the first bullet point, right? To some extent, they're just not necessarily trying to generate a profit. And then last bullet point, owners' interests are unlike business enterprises. So in a business for-profit entity, we're trying to generate a return and then possibly distribute those earnings to the owners of the company. Whereas here in a non-business entity, there's some type of mission or common goal that we're trying to accomplish, and therefore revenue goes toward accomplishing that goal. Okay, so you can see all of these kind of relate. I think they're pretty straightforward, but they also, I haven't necessarily seen a lot of CPA questions that necessarily test this concept. Like, it doesn't seem like they're trying to trip you up or confuse you on whether or not it's a non-business entity or a for-profit entity. So I guess it's just kind of an overview. All right, so this is interesting, and this also isn't necessarily this isn't tested at all. In fact, I just think it's an interesting thing to reflect on. Like, there is a difference between not-for-profits and non-profits from a legal standpoint, and also from a tax standpoint. Okay, so if you look down here at the bottom, a nonprofit is going to fall under 501c3, that section of the code, but a not-for-profit is also going to be in 501c, but it could be under a different section of 501c. So it could be 501c4 or C7 or something like that. And so it's kind of more of a of a distinguishing factor from a tax perspective. Most of the time, people use these words interchangeably, which I think is totally fine. And like I said, the CPA exam doesn't distinguish between this, and actually, the accounting standards codification also doesn't distinguish it. Within the codification, from what I've read as I've studied it, everything is going to be called a not-for-profit. Okay, but it's interesting as they describe like what is contained in the governmental accounting standards versus the financial accounting standards. Okay, that's two sets of codification, and in there it actually says that nonprofit is in the FASB codification, Financial Accounting Standards Board codification. So anyway, I think they kind of use it interchangeably too. But just to go over it real quick, so nonprofits are established for the public good, okay, whereas not-for-profits are fulfilling an owner's obligations, or like or objectives. Sorry, so like a not-for-profit is trying to achieve some organizational goal. Okay, you can see that there is overlap between this, and oftentimes, from a legal standpoint, there's overlap where they're layering these organizations, so they're both nonprofits and not-for-profits with the same name, but accomplishing just a little bit different goals. Because you'll see this, nonprofits can have a separate legal entity. Okay, so similar to like a corporation or an LLC, whereas a not-for-profit cannot have a separate legal entity. And so that brings in a lot of risk to individuals who are part of that or who are forming it. And obviously they don't normally like that. And so normally that's why you'd have that layering of legal entities. The rest of this, I don't know, you can read through it and think about it. I don't know. This came from the Chamber of Commerce website. I'm sure it's accurate, but again, the distinction between the two typically is just going to be just not, in normal conversation, people aren't going to distinguish between the two normally. Okay, so examples of each. So with your nonprofits, you think of like the Red Cross, Doctors Without Borders, Salvation Army. Actually, I need to update this because it's really just the Gates Foundation now. It's not the Bill and Melinda Gates Foundation. And then some examples of not-for-profits: Chamber of Commerce, National Association of Realtors, AFL-CIO, Teamsters, different types of unions, country clubs, stuff like that. So kind of interesting. Okay, so who is using this information? Just a sec. There we go. So primarily donors, right? Now it can be different types of donors. It could be individuals. It could be other nonprofits that are donating to a not-for-profit, or it could be governmental agencies, right? If they're considering awarding a grant to a not-for-profit. So a lot of different types of donors. Also, financial institutions, if the not-for-profit is applying for a loan or something like that. So basically, pretty straightforward. Nothing crazy there. But those who are donating would have common interests, right? So we're interested in promoting whatever cause that not-for-profit is promoting. And so we want to know if they're going to be able to continue to provide the services that they're giving. We want to know how they're discharging their stewardship. make sure that they're running the organization efficiently, and stuff like that. Okay. Not-for-profit accounting uses full accrual basis accounting. And so you'll see, if you haven't studied governmental accounting, there are certain funds in governmental accounting that use modified accrual basis accounting. So full accrual accounting is the same basis of accounting that you've learned in all of your previous financial accounting classes. So starting in like your principles level class, intermediate classes, advanced classes, that's all full accrual basis accounting. And so that's kind of nice that we're sticking with that for now until we get to governmental accounting. And what full accrual basis is we're really interested in how any given transaction impacts the economic entity as a whole. What is that impact? Okay, so financial statements. You'll see that there's not, well, how the financial statements are laid out is different, but as far as like the actual financial statements, there isn't that much difference. So statement of financial position, just think of that as your balance sheet. Okay, so we're going to have assets, liabilities, and net assets, and similar to a balance sheet for a for-profit entity. Okay. One big difference though is with your net, well, first off, we use the term net assets. We don't use equity, right? Because we don't have ownership interests like we have in for-profit entities. So we use net assets instead of equity. And then your net assets are divided into two more categories, those with donor restrictions and those without donor restrictions, right? Because, I mean, that's important, especially large donations or more sophisticated donors. They're going to place restrictions on their donations, and therefore an entity, they need to distinguish between assets that they have that they can spend however they want, or assets that have to be spent for a particular purpose. So without donor restrictions, can be spent however. With donor restrictions, are either going to be dependent on time, the passage of time. So maybe they say, hey, we're going to give you $10 million, but it's going to be over 10 years. That would be based on the passage of time. Or particular actions, right? So here is $10 million, but you need to build a new building or something like that. Okay. Those donor restrictions, don't let them trip you up. Like, it has to be from the donor. Okay. If, I guess let's talk about it here. So internal board designated restrictions. So that's like the board of directors saying, hey, we're going to set this money aside for a particular reason. That is not considered with donor restrictions because the board designated it, and therefore the board can undesignate it, right? So that's your statement of financial position. And you can look this over. I mean, it's in order of liquidity, just like normal. And yeah, then you just go down here and look at the net assets. And you can see with donor restrictions, without donor restrictions. Okay, statement of financial position disclosures. I'm going to skip through this. We'll go into this in more detail, but it's pretty straightforward. I just really kind of want to give an overview. So there's our supplemental disclosures. Okay, statement of activities. So think of this as an income statement for an entity. Remember, though, we're not focused on net income. Instead, we're just focused on basically inflows that are either donor restricted or without donor restrictions. Okay, so you have your change in total net assets, and then your change in net assets without donor restrictions, change in net assets with donor restrictions. So kind of three required elements there. So just change in total net assets, without donor restrictions, with donor restrictions. And then classification of revenue gains, other support, again, with donor restrictions, without donor restrictions. Okay. So you can see under those without donor restrictions, fees, gains on investments that don't have restrictions, contributions that don't have anything, and then net assets with donor restrictions, contributions with specific uses. Nothing kind of new there, right? Stuff like that. Okay. I am going to skip over this one. Or should we? No, let's just talk through it. This is important. We'll do that. We'll cover this more. But I guess the really important thing and what they'll try to trick you on is they'll try to get you to spend. And when I say they, I'm talking about the CPA exam people. They'll try to get you to select an answer that is showing us like spending money that has donor restrictions. And that's just not allowed. First, we have to satisfy the restrictions, then we can spend the money. And so these journal entries are showing that. Okay. Receive cash, but it has donor restrictions. So we need to record it that way, that it has donor restrictions. And it's contribution revenue, but it has donor restrictions. Okay. Then when we meet the restrictions, we can do this reclassification count. Okay. And therefore, so we're debiting that and then removing the cash from the with donor restrictions category. And then the increase, so debit the cash account without donor restrictions, $10,000. Credit the reclassification count. And then we actually spend the money. So in this case, it's a program expense. It just means like that's part of the mission of the organization. That's what a program expense is. And so we record the expense and reduce the cash account without donor restrictions. So that's what I'm saying. Like it has to be without donor restrictions in order for us to spend it. So you have to go through this process. Okay. The only time you don't have to go through this process, don't overanalyze this. Like you'll start to recognize this as you do lots and lots of practice problems. But if we receive donor restricted funds and then we meet those restrictions in the same fiscal year, then we don't have to go through this whole process. Okay. Instead, we can just basically record it as receive the cash without donor restrictions and then spend the money. Okay, so you'll see examples of that. Like I said, I have borderline on whether or not to go through this in the overview, but we'll just go for it. Or I just decided to go for it. Okay, and your statement of activities, you have expense classifications. So program services, I just mentioned that it's related to the mission. So different institutions, the types of program expenses they would have. Okay. Think through that stuff. And then support services are everything else. So think of like payroll, advertising, or like soliciting donations, fundraising, stuff like that. Interesting. I don't know if that shows up on your screen or not, but it looks like it cut off the bottom of it. You'll be able to look through these slides in Brightspace. Okay, so here's your statement of activities. And so, yeah, it's like an income statement, but you can see it's set up quite a bit different because we have a column that's with donor restrictions and a column that doesn't have donor restrictions. So anything that has donor restrictions, if we spend it, we've got to, we're transferring it over into without donor restrictions, and then we're spending it. And then there's one more possible financial statements or something in the notes that I'll show you here in just a minute, where we have to provide additional information. Okay, So look through that. I'm going to skip this. We'll do this separately. We'll skip the works of art. Let's look at statement of cash flows. Okay, so that's about it. It has the same name. Direct method, indirect method, both can be used. We don't have to do a reconciliation from the direct method to show like reconciliation for the direct method. That's not required. We have operating activities, investing activities, and financing activities. So that's normal, like for-profit accounting. And yeah, so this with donor restrictions, you'll see that that actually goes into financing activities. In the operating activities, this is just your normal day-to-day stuff. So you can see that's pretty straightforward. You don't have to memorize all this. This is just kind of an overview. So you kind of have a general idea what's in there. Okay. Investing activities, same thing here. Pretty straightforward what that connects to. Just think like your long-term assets. Okay. Now financing, there's one here in the financing. This issuing bonds, debt, and stuff like that. That's not surprising. Repayments and amounts borrowed. That's also not surprising. But this donor restricted. So with donor restrictions, if they give us money with donor restrictions, and it's for acquiring some fixed asset, like long-lived asset, right? Like you may get confused and think that that would be in the investing section, but it's actually in the financing section. So just be aware of that. That I think everything there is fine. If we look at this one, this type of practice problem, so Jackson Foundation, a not-for-profit organization, received contributions in year one as follows. Jackson statement of cash flows, year one, should include which of the following amounts. Okay, so you'll notice I'm going to, like, the way I do these problems with you guys is actually how I would do them on the test too. Like I want to read and kind of find out what they're asking. Then I go back and try to figure out like what the numbers are. But first, basically, I just know like, okay, it's like, how are we classifying these things into the statement of cash flows? So cash contributions without donor restrictions. Okay, so that's just normal contributions. And so that's going to go in the operating section. Okay. And then cash contributions of $200,000 with donor restrictions with specific requirements relative to acquisition of property. So property, because that's a long-lived asset, then we know that needs to go in financing. And so it's the correct answer. Okay, this one is related to permanent collections. That's a little more in the weeds than what I want to go into right now, so we're not going to worry about that. See a statement of cash flows here. Okay, so other thing that's required is reporting expenses by nature and function. Okay, so it can be reported in one of three places. It can be in the statement of activities. It's part of the statement of activities. It can be in the notes to the financial statements, or we can have a separate financial statement. Now they try to trick you. They'll try to give it the CPA exam people. When I say they'll try to trick you, I'm always talking about the CPA exam. So they'll try to trick you and like give it some title, and the title may make sense, but just know, like the FASB, they did not give it a specific title. So there is no specific title. Organizations can name it what they want. Okay. So functional expenses, we're going to either have program services or supporting activities. Okay. which we've kind of already talked about that. And then the natural expense classification, just think of that as like a chart of accounts. So things like salaries, rent expense, supplies, interest expense, depreciation, all that stuff. Okay, so basically that's what this other possible financial statement or in the notes as like a schedule or whatever, that's what it's doing. Is showing what is program services, what is supporting activities, and then the natural classification. Okay, and so here's an example of that. And these arrows here go back to the statement of activities. Okay, so you can see that. Let's look at these questions, see if they're good. Yeah, I think these ones are good. So beginning of the year, Baker Fund, non-governmental, not-for-profit corporation received $125,000 contribution restricted to youth activity programs. Okay, so this would be with donor restrictions. It's got to be used for these youth activities, right? During the year, youth activities generated revenue of $89,000 and had program expenses of $95,000. What amount should Baker report as net assets released from restrictions for the current year? Okay, so the key on this is we generated revenue. Remember, when we generate revenue, it's not contribution revenue. This revenue here, it can be used however we want, right? So it doesn't have donor restrictions. Therefore, we wouldn't want to use it to pay for these expenses, right? Because this contribution here, this $125,000, it has a donor restriction to pay for program expenses. So we want to use this up first, this $125,000 up. So basically $95,000 is being released from restrictions, and then it gets spent. So the correct answer is C. As far as receiving it in the same year and then spending it, you'll see when the fact pattern lends to that, but don't overanalyze that. Okay, just stick with the general rule first. Don't stress about the exception to the rule very as much. Okay, so let's look at this one. In fiscal year ended June 30th, year one, Barr College, a large private institution, received $100,000 designated by the donor for scholarships for superior students. Okay, so we received money and it was for a specific purpose, right? So right here. Okay. Then we ended up selecting the students and awarding the scholarships. Okay, so we met the criteria, okay, and spent the money. How should the July 26th transaction be reported in Barr's statement of activities for year ended June 30th, year two? Okay, so if we look through the answers, so as both an increase and a decrease of $100,000 net in net assets without donor restriction. So this one here is kind of that exception one, right? Because we received it in this year and then we spent it in year one also. Okay. Actually, Barr select a student. How should the July 26th transaction be reported in Barr's statement of activities for year ended June 30th, year two? So this is all really close together, right? Where we received the money and then we spent it. So if you look at like that one, it works because we received the money, we kept it as net assets without donor restrictions, and then we spent it. Okay. If you look at this next one as a decrease only in net assets without donor restrictions. Well, the issue with this one is like where do we show where the money came in, right? So we need to be able to show that. And then the other two, just aren't correct at all. Like, we've got to do journal entries to show we've received the money and spent the money. Okay, so A is the most correct, even though it is kind of tying into that exception to the rule a little bit. The only way you'd have an answer that would be better is if it talked about increasing net assets with donor restrictions, and then decreasing net assets with donor restrictions, and then increasing net assets without donor restrictions, and then decreasing. So like this one, you could make this more complicated and it could make it maybe more right. But it would basically be just showing the part about the money coming in with donor restrictions and then that being decreased. So A is definitely the best answer here. Okay, let's look at this one. Following expenditures were made by Green Services, a society for protection of the environment. What amount should be classified as fundraising costs? And the society statement of activities. Okay, so printing the annual report, that wouldn't be fundraising. That is, yeah, I mean, that's just part of what the organization has to do, but it's not for fundraising. Unsolicited merchandise sent to encourage contributions. There we go. Now that's fundraising, right? And then cost of an audit performed by a CPA firm would also not be. So neither of those two. So just the 25,000. See. Cool. So I'm going to try and do videos like this that are fairly quick and cover specific topics. So this one is like, the specific topic was just an overview of not-for-profit accounting. So thank you for watching.